Good evening, good evening, good evening, good evening. Yeah, welcome to our very first video. Yeah, on trade. I hope everyone is doing great. Now I want us to learn. Today I want us to dwell on the market structure because I believe that is the first important things that trader must understand before entering into this world of trading. Yeah, my name is Mokaya Franklin, and I hope that we learn together, and make our lives better through this thing. Now, let's talk about the market structure. When you open your charts, you'll see structures, you'll see some things look like candles. Yeah. Now, a market structure can look like this. Market structure can look like this. A market structure can look like this. Market structure can look like this. A market structure can look like this. A market structure can look like this. A market structure can look like this. Now, a market structure can look like this, or it can look like this. Yeah. Yeah, market structure can look like this. If you check on this side, our very first structure here, this structure looks like it is going up. Yeah, it is going up, retraces a bit downwards, and then goes up, and then down, and then up, and then down. But the direction generally seems like it is going up, like this. Our direction is going this way. This is our direction. Now, what about this one? The other one, the direction is downwards. If you are seeing, it is going down, pulls up a bit, and then it goes down, pulls up a bit, then goes down. Now, the first trend is known as an uptrend. It is known as an uptrend. It is known as an uptrend. It is an uptrend because an uptrend is characterized by higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. It is forming as some higher highs and higher lows. A downtrend forms higher lows and lower lows, lower highs, lower lows, lower highs. Yeah, so the first image here is a downtrend, and the other one, this one, is an uptrend. I believe you understand that. Now, what differentiates the two, the uptrend and the downtrend? Let me write this so that I cannot confuse you. This is the downtrend. This is the downtrend. Right. This is the uptrend. This is the downtrend. Now, apart from the two, sometimes the price fails to go up or down, and it goes sideways like this. It goes sideways like this. It just forms equal highs and equal lows, equal highs, equal lows, equal highs, equal lows. It is not breaking structures, it is consolidating. Now, this one is known as a sideways market or a consolidation because it is not making any higher highs, it is not moving up or down, it is just there consolidating. It has equal highs and equal lows. So I believe we can differentiate the three markets: an uptrend, a downtrend, and a sideways market. An uptrend is characterized by higher highs and higher lows. A downtrend is characterized by lower lows and lower highs. I believe to that point we are okay. Now, let's talk about the uptrend in deeper details. Let's talk about the uptrend in deeper details. Now, an uptrend simply on the books looks like this, but it is more complicated. Inside these moves, the up and the down moves, as it breaks structures to the upside, there are inside these moves, there are more moves when you go to the lower time frames. For example, we can have an uptrend like this one, but when it is retracing, it is making some inside this move, it is making some retracements, small retracements, yeah, higher highs, and it has a, inside the larger uptrend, there's a smaller lower trend, yeah, there's a lower trend, and then it taps into some order block, and then it moves, boom. So inside a move, there are smaller movements, either downtrends or uptrends, yeah. So we need to understand what happens inside these structures. It will be so important to understand what happens inside these structures. For the downtrend, it is the same thing. Inside a move, either it is a movement to the upside or to the downside. Inside those movements, there are smaller down. If you open in the smaller time frames, you'll see some trends inside those bigger time frames. From point A, let me name this as point A, this point here as our point A. I'm sorry for this. Let this be our point A, and then this other one will be our point B. These are the same points. I want them to be the same points. Look at this. I want you to look at this. And then this point here is our point A, the same move. I want you to see the same move. The same move. Point A and point B is the same move. Let me do this. Let me move this upside a bit. This one. I want to move it, all of it, to the upside, so that it can be clear for us. Yeah, I don't want anyone to be confused. Let me show you. You see this point and this point B, this point here, this point, and then this point and this point. Now let our point A to be this point. This is our point. Let me move this one so that this is our point A, and then down here we have our point B. The same movement. I want us to compare the two. Here we have our point B. Yeah, sorry. Here we have our point B. This point. You have a point B. Good. And then the same applies to this one. We have our point A here and our point B here. Then we have our point B here. The same movement. Just this is the same movement. But when you go to the lower time frame, you'll understand the difference between the two. Now check this out. The same movement. This same movement is this same movement. Look at this. This same movement from A to B is the same movement here from A to B. But now this movement from A to B, if you go to a lower time frame, this movement from A to B, it will look like this. It is there's a downtrend inside this small move that looks simple here. There is some movements. There's a downtrend inside this move A to B. If you go to a smaller time frame. Now you should be careful to understand both time frames, the upper, the lower time frame and the higher time frames. The higher time frame can be telling you that this is an uptrend, but in the lower time frame, if it starts tracing and you think it is going up from the information from the higher time frame, then you will be in trouble. You should understand the movements. You should know how to tackle this thing between higher time frames and lower time frames. Otherwise, if you don't understand the movements inside these time frames, then there will be trouble. So the first step to understanding the market and how price moves, we need to understand the market structure. We need to understand that an uptrend has higher highs and higher lows. What I mean by higher highs and higher lows, higher highs and higher lows, this and higher low. And then we move to this one, which is an higher high and then higher low. Higher high, higher low. Now as the price goes up, now let's go back to this one. As the price goes up, let me remove this. As the price is going up, it is breaking structures here. As you can see, this structure, this point A, this structure, this higher high is broken to the upside, and now we have created this a break of structure to the upside, and then it continues to break structures to the upside. It continues breaking structures to the upside. It breaks structure, retraces back downwards a bit, and then it continues the trend to the downside, breaking more structures. Look at this, it breaks more structures. The price is breaking more structures. Now BOS means break of structure. When it breaks another structure that was formed before, then it has broken structures. Those highs that are being broken are weak highs, because a strong high cannot be broken easily. Once it has been broken, it becomes a weak high. Same to the lows. If lows are being broken, then it means that those lows are weak, but stronger lows, they are not broken easily. Now our prices, as you can see, our price is going up. Our prices are going up from this point to this point, and then retraces back and then moves. But now our price, when it is retracing, it retraces to some point here. Now our prices can retrace to let me show you. The prices can retrace to either an FVG. Let me show you. The price is retracing from this point. It tapped to this, into this point, and then now it is going upwards. Yeah. Now this point here where it is retracing from can be an order block. An order block is a point at which there were more buyers that pushed the price upwards. Also known as our order block can be our demand zone or a supply zone. For an uptrend, it is our demand zone, because from our demand zone is where people buy. It is a strong area where buys happen. So our order block, the price reacted from our order block. Our price can react from an order block, which is a demand zone, a very strong demand zone, and then breaks the structure. Or sometimes the price can react from something known as an FVG. I'll show you an example of an FVG. Now our price can react from an order block or an FVG. An FVG means a fair value gap. What does it mean, a fair value gap? When the price has momentum, it moves very fast, leaving some gap between two candlesticks. When it leaves a gap between two candlesticks, like this one. Let me give you an example. If you can see here, our price is going up. Our price went up. Let me show you. Look at this. Our price went up, leaving this. This was an FVG. Let me show you. This was an FVG, a fair value gap. If you can see this candle here, let me show you. This candle here, this red candle, this one, this bearish candle. This is our first candle, and then this blue one, this green one is our second candle, and this one is our third candle. Between the first candle and the third candle, there is some gap between. There was no overlapping of the wicks. These are the shadows. These ones, these small wicks, these are wicks. This one, and then there is no overlapping between these two candles, the wicks of these two candles. What it left is an FVG or a fair value gap. And then now what happens? The price went up and then later it came and tapped into what? Here it went up and then it tapped into the fair value gap. It tapped into the fair value gap and then it went up to break more structures. You see, mostly prices tend to come into fair value gaps or order blocks before going upsides or downside depending on the trend. I hope you understand. Now prices react either from an order block, or it reacts from an order block or an FVG. I believe you understand that. Now up the price is moving from here. Let's assume there was an order block here, a very valid order block, a very strong demand zone. The price moved up, came, tapped into the demand zone, and then it went up to break more structures, right? And then the price retraced back either to an FVG or an order block, and then it went up, broke more structures, came back to an FVG, and then it went up. Now our prices, various pairs react from either an order block or an FVG. Now you should understand, for example, gold. When trading gold reacts from FVGs very much. It comes to a fair value gap and then it goes up or downside. It goes back into, it retraces back into a fair value gap and then it goes. It reacts into a fair value gap and then it goes. Sometimes other pairs, there are pairs which tap into an order block and then they move. So you should understand different pairs react differently, but there's another thing. Sometimes it can fail to tap into an FVG or an order block. And what happens if our price began? This is our last higher low, and then this is our higher high, and then the price retraces to below 50. If you are seeing 50 here, let me show you. Now we want, let me show you this. Let me show you this. Now sometimes the price, our 50% be above our 50%, this is our Fibonacci retracement. Above 50%, we have a premium zone. A premium zone means you can sell from this zone downwards, and then from the discount zone you can buy. We usually buy at a discount and then we sell at premium. When prices are high, we sell, but when prices are low, we do what? At discount we buy. So that this is what happens below 50% or 0.5. Below 0.5, these are the same as 50%. We buy, prices buy, and then above the 50% premium prices, we do what? We sell. Now we wait until our price is below the 50%, or 0.5, and then we now check for a change of character to the upside. I'll talk about the change of character, so don't worry. We'll check for a change of character and then we do what? We buy to the upside. Always buy from discount and then sell from the premium levels. You cannot buy when prices are high. We wait for prices to be low and then we do what? We buy from lower prices to the upside. But we cannot also sell from lower prices. We will go at a loss. So we buy from higher prices or premium zones. I believe you understand that. Now, let me talk about the change of character and then we'll continue from there in our next lesson. Now, what about the change of character? Let me just use this point A and B. Let me use this. Let me make another one. Let me just make another one very fast. Let me make another one very fast so that we can learn. Now, when we are talking about change of character, this is what I mean. This is our lowest price. It is making higher highs and higher lows. Our prices are making higher highs and higher lows. it retraced, and then it went up, broke structure, and then it came back. Now I want us to go to the down lower time frame. This is what it forms. It goes like this, it goes down like this, it goes down like this, it traces a bit, goes down like this, comes back like this, and then goes down like this. Yeah, like this, comes back like this, and then comes back like this, and then goes to break more structures like that, like that, like that, like that. Now listen, whatever is happening here, the price is making, look at this, the price was here, it went up, retraced back, broke this structure, broke this point, and then it went down again, retraced back, broke this structure, and then it went up, retraced, and then broke this structure. Now what is happening? Whatever is happening here, don't be worried about it. When prices reaches this point, and then it starts to retrace back, what do? Now we mark our point of interest zone here, where the price will react from at this low, either an order block or an FVG, and then we wait for a change of character. That is what I want us to talk about. Now let me mark the break of structures first. Here we have a break of structure at this point because this point was broken. This is our break of structure. This is our break of structure. We'll talk about valid break of structures after you have understood this one. This is a valid break of structure. This is a break of structure. This is a break of structure to the upside. And then this is a break of structure because the prices are breaking structures to the upside. Look at this. This is break of structure to the upside. Now what do I mean when I'm talking about change of character? Look at this. The prices are going down. It is this price broke structure at this point. It went up, it started retracing back. This movement is retracement. It formed a higher low, higher, lower low, lower high, lower low, lower high. At this point, look at this. At this point, the price came back up. Look at this. It was forming lower lows and lower highs, and this was our last higher low, and then the price came and took this lower low, okay, and then it went up to break structures to the downside. It broke, instead of making a continuing. Look at this. The price broke structure to the downside, but here it came, instead of going down, instead of reacting from this point and go down to break more structures to the downside, it did what? It broke this structure to the upside. Now this is called our change of character. When the trend changes, this was a downtrend. Look at this. This was a downtrend, but it changed. Instead of making more lower highs and lower lows, it broke this structure to the upside here. So we mark this our change of character. What happens when our change of character happens? We mark our order block at this point, and then we wait for the price to come back to this point and then go upside. Look at this. This is our change of character. Instead of making lower lows and lower highs, it decided to make a higher high. This one, instead of going down like the trend was, it started going upside here. Now this becomes our change of character. there's a change of character. It was a downtrend, but now it is an uptrend. Now when you see a change of character, the trend is changing. Now we wait for the price to retrace back into an order block that might be at this point on the lower time frame. There might be an order block at this point, or an FVG, because we said it reacts from an order block or an FVG, and then it goes upside. Now this is our order block. It reacts from this point. When it reacts from this point, we can take our trade from this point and we can buy to this point. Let me try to buy from this point. Let me increase this one for better visibility. Now look at this. Now since I know there is a change of character, I'll wait for the price to come to this order block, and then I take my buy from this point. I just take my buy from this point like that, and then I put my stop loss below this low like that, and then I target where? I target this strong eye to be broken, this eye to be broken here. At this point I target this eye, just like that, boom, and the trade plays out and you are in profits and you go and do your own things, just like that. So I have a trade, and I do the same. Once the price breaks above, I wait for a change of character. When it retraces, and then I buy. Now vice versa is for downtrends. The same thing happens. Check for a change of character and sell to the downside. If it is an uptrend, check for what? Just check for a change of character. It retraces back to an order block or an FVG, or if you can't wait for that, use the Fibonacci retracement. When the price goes back to 50% and below, buy, because we said we buy from discount. Look at this. Let me give you an example of this. Yeah, let me use my Fibonacci retracement from this point to this point. Below 0.5 here. No, below. Sorry. Below. Wait. Sorry for this. Let me delete this. Let me delete this. Forgive me for this. Okay, I'll delete it now. Check this is 0.5. Below 0.5 here, below it, this is a discount zone where people buy from, and then above 50, this is the premium zone. So we don't buy from the premium zone. We, after the change of character, wait for the price to retrace to discount zone, and then you can buy from discount zone, putting your stop loss at this point and targeting the break of this high, just like that. Yeah, so that is it. I believe you've learned something, but we'll continue expanding this knowledge until all of us understand it better and better. Yeah, so that is the structure. That is about the market structure for today, but we'll continue from there next time. I believe we learn together. If you know something, also teach me, because I don't know everything. I'm also still learning. But they say if you want to master your art, teach others, and then you'll master your art. Yeah, me, I don't want anything. I just want to learn. Also teach me, call me, so that we can share ideas. Yeah, otherwise, may God bless you. Let's continue shining. Yeah, good day. Yeah.